lot of economists are starting to say when you add it all up, the port strike, possible oil price increases from the Mideast, and so forth, the hurricane effect, that we could actually see a bit of a stagflationary Q4. What are your thoughts?
Yeah, thanks for having me. And I think that actually, when we see everything that's kind of on the horizon, Chair Powell probably has, almost like thrown his arms up in the air and maybe banged his head on his table, like, what do we do here? Because a lot of the data that we're going to be getting for the fourth quarter is going to be filled with all sorts of distortions. You've got the port strikes, as you mentioned, and so that's going to likely affect the employment numbers. We have to see how long the port strike lasts, because they are going to have to worry about, does it extend past that October 12th as far as the survey date? So maybe it'll be resolved before then, but now you have higher oil prices. Those port strikes could lead to inflation. So you could see an environment in which you see that weakening labor market and higher temporary inflation. The Fed is going to ask themselves, are they going to just look through this and just stick to their plan? My guess is that Powell is probably really convinced that they do need to really get at least 2 more 25 basis point cuts in for this year. So perhaps they're a bit on autopilot despite all the noise that's going on.
Right, but autopilot meaning they continue to cut rates. The economy continues to expand. I mean, interested to kind of look at how you're playing this market with industrials, healthcare, REITs, financials. Financials, by the way, one of the best names in the third quarter. Why so?
Yeah, I think that the reason is that we are seeing an economy that is slowing, but it's not necessarily stopping. There are, of course, risks out there that could lead to a recession or a more dramatic slowdown. But we think that the likelihood of those events are fairly low. And so if we go from really good growth to moderate growth and are able to kind of stay around here, we think that that actually sets up a pretty good environment for like industrials from a valuation perspective. Looks pretty attractive. We know manufacturing has effectively been in a recession for about 24 months now already. And so if they get a little bit more traction, healthcare also looks attractive. And then with financials, as the Fed continues to cut rates, that should be good for their funding costs and also take some pressure off of those parts of their loan book that are experiencing an increase in defaults. And so those are 3 of the areas that here at Annex on our investment committee that we're kind of optimistic about for the balance of this year.
Brian, you don't have to give like one side or the other answer to this question, but we do have this election coming up. Does it matter to the market how the election turns out? And I say that because watching the VP debate last night, which, by the way, was incredibly civil and there was hugs and it was kind and it gave you hope and whatever, it doesn't seem like the two sides' economic policies, not social, but economic policies are that much different. Maybe a little adjusting over here for taxes, a little higher corporate tax rate over there. We also have Congress, which is probably going to be split. Nothing will probably get done no matter who wins. Anyway, does the market care about the outcome?
Yeah, I think that the market does care about the outcome because there is a scenario where, let's say if it's a Democrat sweep, where you could see a situation where they try to get rid of the filibuster and they actually are able to get this almost wish list of policies through, which do include an increase in corporate tax rates, the top marginal tax rate. Really, for the markets, the bigger companies, they don't effectively pay that highest tax rate anyways. It's more the smaller caps. So I think that it matters as far as maybe under the hood, as far as with that tax policy. Regulatory policy obviously would matter as well. But that's a very low likelihood that you would get that Democrat sweep. So if you get divided government or some form of Republican, if there's a Republican sweep, then that is likely to be somewhat business as usual. We are going to have to reckon with that massive fiscal cliff. If you remember back in 2012 into 2013, that fiscal cliff, that is going to be here on steroids at the end of 2025, unless they work out whether or not the Tax Cuts and Jobs Act, those provisions really get extended. So once we do get through the election, the market will then price in the likelihood of that type of fiscal cliff event happening.
Yeah, no, I haven't heard fiscal cliff in a long time, like having flashbacks. But I think about what David Tepper said on CNBC the other day. I think it was something to the effect of, as long as it's going to be a split, he doesn't have to really pay much attention to it. So that's how it looks, I guess, at this point. Brian, thanks. We appreciate your time today.